When talking about trends, you usually hear the terms higher highs and higher lows, lower highs and lower lows, but that's just the surface level of market structure. Most people don't know the deeper structure or skeleton of the market and how it all connects. In this video, I'm going to be explaining something I learned after a couple of years of trading BTMM, which is short for Beat the Market Maker. I'm going to be showing you the in-depth breakdown of the structure behind what you see on the chart, the higher highs and higher lows and lower highs and lower lows, uptrend, downtrends, all the things you see on the market. For those of you new to the channel, I don't trade ICT. I'm not an ICT trader. I don't consider myself an SMC trader, but those of you that have been following my channel, you know that I trade BTMM. Although the concept that I talk about are similar or sound similar to ICT concept or SMC concept, I don't trade ICT or SMC. If you're new to the channel, make sure you subscribe to see more videos like this. So without wasting any more time, let's get into it. But first of all, let me go through the pattern once again. So we know the pattern. We have Asian session consolidation, right? Market's gonna consolidate in here. Either break to the upside or break to the downside. Give you a W formation or not. Then reverse to the upside and then possibly come back down and then end in consolidation again. Right. So we know that this is the pattern. So how can we use this pattern to form trends? Now, I showed you guys a variation of the pattern, right? Let me show you a variation of the pattern once more. Another variation. Right. So when it comes to forming trends, there are ways they form uptrends and downtrends and consolidations. So if they're going to form a trend, just think about this. If you have consolidation here, market makers break to the upside, maybe give you an M, maybe they don't. Then they break to the downside, all right? Then eventually come back up and end in consolidation, right? So if this is going to be the pattern that happens on a day-to-day basis, how do you think this is going to apply when it comes to trends? How do you identify, how does this form trends? How does this pattern form trends? So it's very simple. If you repeat this pattern multiple times across multiple days or weeks, you're going to notice that it's going to begin to form a trend. Remember, I told you the Asian session is used to connect one day to another. So this is the Asian session here, this is the Asian session here, this is the Asian session here. By the time you copy and paste this multiple times into multiple days or weeks, what do we have here? You're going to see that this is going to form your downtrend, right? This is going to give you this downtrend. We draw your trend line. It's going to give you a downtrend. All right. So it's basically giving you a high here, a low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low here. Let me add this box. All right. So this is how they give you a downtrend. So if market makers are going to the downside, obviously remember they're going to have to break to the upside first, then eventually come back down. They want to sell, they will first induce people to take buys, then they will sell. All right. So basically, all these areas here are inductions. Let me see. Where's the color? Okay. Change to purple. So all these areas here, these up moves, are basically market makers trapping traders in buys. Trap and move, trap and move. All right. So market makers are trapping traders at these levels here. They're trapping traders here, trapping traders here, trapping traders here, trapping traders here. So some people are going to be taking buys in on these areas, taking buys here, especially people that are trading breakouts outside the Asian range. Right. So this is how market makers form a downtrend. So how do they form an uptrend? It's very simple. If this is what forms a downtrend where they consolidate, they break to the upside and then they break to the downside and then end here. If this is how they form downtrends, so if they want to form an uptrend, what do you think they're gonna do? You just have to invert this, just turn this upside down. That's where you're gonna get your consolidation like this, all right? But instead of breaking to the upside, they're gonna break to the downside. Possibly give you a W formation, go back up, come back, end in consolidation. All right. So simple. If you copy and paste this here, what do we have? You have your Asian session consolidation. It gives you what? A W formation like this to reverse the trend, right? Where is the induction? Where are they inducing you to take sales? They're inducing you to take sales here, right? They're inducing you to take sales. Understanding that the market makers are about to reverse this trend, you would know that you're not meant to be taking sales at this level here, right? I'm going to explain more of that, how to know when the market is about to reverse, when they're about to change trends. But once you understand how trends reverse, this is how they reverse. They just invert the pattern, basically. They invert the pattern and induce people to take sales, and then you reverse to the back to the upside. And then what's gonna happen is if you just duplicate this, duplicate, duplicate through multiple days, duplicate once more, you're gonna have your you're gonna have an uptrend, right? Simply connect the lows together, connect the highs. This is your uptrend. So we have the down cycle down here. We have the reversal here. This is how they form M and W formations that reverse the trends. And then you can see that they're gonna eventually continue up, right? And this is where you can, with the consolidation. Now, the purpose of consolidation, right? The purpose of this consolidation is to create support and resistance. So one of the reasons why they consolidate is to also create support and resistance, right? So there's people that trade support and resistance. There's obviously going to be someone that's going to plot out support and resistance line and extend it to the future, hoping for price to try to bounce off of that area, and maybe they will look for sales or to look for buys. So basically, if this Asian range is creating support and resistance, then you're gonna expect that someone's gonna draw a support and resistance line here. Someone's gonna draw a support and resistance line here, right? Someone's gonna draw a support and resistance line here. Right. So what's basically going to happen? Let me change the color of the line so that you can see it clearly. Let me change it. Or let me use a box instead. So let's say we have this is a resistance or support, one of them, support and resistance. Let me change the color to what color would, okay, let's go with green, right? Then this is going to also be support and resistance area here. This is going to be a support and resistance area here. This is going to be a support and resistance area here, right? So basically, what's going to happen is when price comes back to this to this resistance, there are people that are going to be looking to sell this, right? There are people that are going to be looking to sell this. So think about this. People are going to be looking to sell at this area here, right? Because of its resistance. And then market makers are also breaking out to the downside to induce people. Remember, if they're going to induce you, if they want to go up, if it's an up cycle, they're going to induce you first of all to go to the downside. So this area here is going to be inducing you to take sells, right? So now it correlates with the resistance. People are going to be selling. People are going to be taking the breakouts here, taking sales, not understanding that this trend has reversed. They have reversed the cycle. It's no more a down cycle. It's now an up cycle. It's now an uptrend. They're going to be taking sales here, taking sales here, taking sales here, just for market to hit the brakes and then reverse back up. Go back to this other resistance here, kind of do the same thing. Now, if it breaks the resistance and enters back, people are going to be selling here, selling here, selling here, selling here, selling here. Right? What happens? They repeat the same pattern again. They repeat the same pattern again. Induce people to take buys, to take sales, then they buy, then they keep on doing the same thing till till they decide to once more reverse this trend. And if they're going to reverse the trend, they're just going to basically do the same thing, induce to the upside, give you an M formation, reverse back down, come back and start to consolidate again. All right, start consolidating again in here. Let's see. Change this, yeah. So this is usually how they form the trends. Now, how do they form? They also use this thing to form what's it called?
chart patterns. Like I showed you just an example where they formed an M formation, sorry, a W formation. So we have the consolidation here, right? Price breaks to the upside, just comes back down like this, and then begins to consolidate, right? So we have this here, then we have this here. If they're going to give you an M formation, this is what it's going to look like. After the consolidation, they're going to induce to the upside, go back to that high, fail to break the high, come back down, and then end the day in consolidation. So what do we have here? Our we have our M formation here, right? Connecting this half to this half, giving you a full complete M formation structure. And some people are gonna even want to draw a wedge formation like this to say, this is a breakout of the wedge. Let's take buys here, not knowing that this is an induction, inducing you to take buys. Market makers are just inducing you to take buys. They come to this high, fail to break the high, they're gonna give you an M formation there. And they're gonna reverse the trend back down, leaving everyone that took buys in here trapped. And then they're not gonna come back there. Then they're gonna continue in the direction that they want to continue in. They also use these patterns to form head and shoulders. You know, head and shoulders is a chart pattern. So what they're gonna do is the same way you have the consolidation here, right? They're gonna break to the upside, come down, consolidates. Right? So let's connect the Asian session consolidation here. What they're going to do is they're going to break higher, come back down, begin to consolidate. Right? And then what they're going to do again, just repeat the same pattern. Break up, come back down, begin to consolidate again. And then that gives you what? That gives you have your left shoulder, your head, and your right shoulder. Right? And then they reverse the trend from there. So this is an example of how they create chart patterns using this pattern. Remember, I told you this is the real structure of the market. This is how they form all these patterns that you see on the charts. This is how they form them, mostly the macro patterns that you see. All right, so this is your shoulder, head, shoulders pattern. But when you're looking at the chart, you don't see this because you don't see this consolidation. Right? You will not be, once you start seeing the consolidation, you can easily identify these things. But normally what they teach us online is just you have your shoulder, you have your head, you have a shoulder like this, but they don't teach us like the underlying pattern inside that creates these patterns, that creates these structures that we see on the charts, right?